switching gears for a second, I wanted to ask you about COVID-19 and sort of some of the arguments that value is broken, but breaking them down into those short-term arguments and long-term arguments. And one of the interesting questions I've gotten that I had a hard time answering, to be honest, is when we look at COVID-19, all of us that are value investors are looking at the price relative to something, whether it's earnings or cash flows, and all of those somethings occurred before what has now become a breaking point. So whatever those earnings were, whatever those cash flows were last year, whatever it is after that breaking point is going to probably be really, really different. And so the question is, how do you distinguish the companies that really are attractive values when maybe we can't rely on those past fundamentals as much as we can in a normal time?
Yeah, that's a really good question. And I don't have a really good answer for it other than I don't know that this is any different to what we always do. Like, we're always buying something in a crisis. And it's more specific to the company. And the reason that you get this chance to buy it is because there's this massive uncertainty. People just don't know what the next quarter or two look like. And so for value guys, like, that's business as usual, right? You just get to go in and buy these things before you find out what the answer is. But you got an idea on a TTM historical basis what the business is capable of. You've done some work on the balance sheet. So yeah, they can survive. They generate free cash flow under normal circumstances, clearly the next quarter or two. Anybody who does a DCF valuation can tell you how important the front month year or the front years are to the valuation. Like, not very, right? It's all
like
in
5% or something like that. Yeah.
It's not really relevant at all. So the question is, can they survive? But as a value guy, you've already done that work too, right? You've looked at the balance sheet. You've got an idea